You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
Okay, so you shared some really interesting bits recently, market moves, and some pretty direct political talk about the U.S. Federal Reserve.
Yeah, it's been quite something.
So for this deep dive, we really want to unpack that. Get past the headlines on President Trump's criticism of Jerome Powell, the Fed chair.
Right.
We've got market data, analyst quotes, the whole picture. The idea is to figure out, the immediate hit, but also maybe the bigger picture, the longer term stuff.
Exactly. And what's fascinating here is how this political talk is really crashing into, central bank mechanics and just general market confidence.
Mm-hmm.
And the really striking part, even things we think of as totally stable, like the U.S. dollar, U.S. treasuries, they're suddenly under the microscope. It feels like maybe a fundamental rethink of how safe U.S. assets really are perceived.
Okay, so let's start where the ripples first hit. Asian markets, right? They seem to react first.
That's right. We saw an almost instant dip in a big index of Asian shares. It often highlights how sensitive those markets are to any hint of U.S. policy uncertainty.
Kind of like an early warning system.
Sort of, yeah. A barometer for global risk jitters, starting in the U.S.
But interestingly, U.S. equity futures were looking maybe a bit steadier, possibly even hinting at a small bounce back. Why the difference there?
Well, there could be a couple of things going on. Sometimes those first overnight reactions are, a bit knee-jerk. Markets take time to digest.
Okay.
Plus, there were some whispers, some other reports about maybe progress on trade tariffs. That might have calmed U.S. investors specifically, even if the global picture still felt anxious.
Right. A bit of a push and pull then.
Exactly. Uncertainty versus maybe some hopeful signs elsewhere.
Okay, let's focus on President Trump's actual words. He was on Truth Social, pretty strong stuff. What were the main points stirring things up?
Well, he doubled down on his view that inflation is virtually non-existent was the word he used, I think. And he really pushed for the Fed to make preemptive cuts to interest rates.
Not just the suggestion, then.
Oh, no. Very public, very direct pressure on monetary policy. And the timing. Wow. Right before new inflation numbers were due out.
Yeah, figures the Fed would be watching like a hawk for their next decision.
Precisely.
Which brings us right to this really core issue.
Mm-hmm.
For the Fed's independence, it feels like the concern level there just shot way up.
Definitely.
Yeah.
I mean, when you have someone like Kevin Hassett, the National Economic Council director, actually saying the president is, quote, studying whether he's able to fire Powell.
Wow.
Yeah, that sends a huge unsettling message. The whole idea that the central bank can operate without political meddling is, it's foundational for trust. Any doubt about that independence is a massive red flag globally.
And this is where we get some pretty blunt analysis. Kyle Rada at Capital.com talked about a potential crisis of confidence in U.S. markets, even said it could, break the global economic order. That sounds extreme.
It does sound dramatic, but Rada's connecting the dots between Trump's trade policies and this potential confidence collapse.
How so?
His point is that these aggressive tariffs like we haven't seen in, a century, they aren't just messing up trade flows. They're also making the U.S. look less predictable, less like a stable leader.
Right.
And economists worry that this mixed trade wars, plus pressure on the Fed, could give us the worst combo, inflation that sticks around, and a recession. Stagflation, basically. That's the big fear.
And Michael Brown at Pepperstone, he seemed to be on a similar wavelength, warned about a huge injection of volatility, maybe even a dramatic rush out of U.S. assets if Powell actually got fired. He even mentioned de-dollarization maybe becoming more real. That sounds like more than just markets having a bad week.
Exactly. Brown's pointing to a potential deep loss of faith in U.S. institutions if the Fed looks compromised. If investors, if other countries start doubting the Fed's stability, its impartiality, they might start looking for alternatives to holding dollars.
So not just market jitters.
Far from it. It could really shake the dollar's position as the world's main reserve currency.
So these actions are forcing people to, reevaluate the dollar and U.S. treasuries, the things everyone always runs to when things get scary. Why now?
Because the uncertainty is coming from the U.S. this time, from its policies, its political pressures. Usually, global chaos makes people buy dollars and treasuries.
Right, the safe havens.
But if the U.S. system itself is looking unstable because of political interference with the Fed, because of disruptive trade moves, Well, then that safe haven appeal starts to fade, doesn't it? You start asking, where is the real stability?
And it's not just the analysts. We heard about Paul Singer, the hedge fund manager, right? Apparently warned privately the dollar could lose its reserve status. How seriously should we take that?
Look, coming from someone like Singer, with his experience and track record, even a private warning gets attention. It tells you these worries about the dollar's long-term future aren't just like academic theories. They're being seriously discussed at the very top levels of finance. It really highlights the potential long-run fallout from messing with Fed independence.
It's interesting to put this next to what other central banks are doing. Like, the Bank of Japan seems to be just sticking to its plan, gradually raising rates, even with all this U.S. uncertainty swirling around.
Yeah, that contrast is telling. It shows different countries have different priorities, different economic situations.
Right.
The Bank of Japan's looking at its own backyard, its own inflation numbers. They know what's happening globally, of course, but they seem to be charting their own course based on Japan's needs, not just reacting to U.S. pressures.
Okay, let's drill down into the actual market movements. It was a real mixed bag across different assets, wasn't it? Walk us through some of the key ones.
Sure. Stocks first. S&P 500 futures actually ticked up slightly. Maybe that initial shock wore off a bit, found some support.
Okay.
Hong Kong's Hang Seng futures were basically flat. Maybe a bit of a wait and see there. Japan's Topix index gained a little.
Yeah.
But Australia's S&P SX 200 and the Eurostoxx 50 futures, they were both down.
So different reactions in different places.
Definitely shows regional differences in how this is all being read and priced in.
What about currencies? The main dollar index didn't move a whole lot, but some individual pairs shifted.
Yeah, the overall Bloomberg dollar spot index was pretty steady, which might seem weird given the concerns, but that could just be different currencies within the index moving in opposite ways, canceling each other out.
Oh, okay.
We did see the euro weaken a bit against the dollar and the Japanese yen too. The offshore yuan, though, was pretty stable. Currency markets are complex, lots of factors always at play.
And crypto. That Bitcoin up a bit, either down slightly. Any connection there?
Maybe. Crypto often dances to its own tune. You could argue Bitcoin rising shows some people looking for decentralized options when traditional finance looks shaky.
But maybe just crypto being crypto.
Exactly. Could just be normal crypto volatility. Ether dipping slightly might not mean much in this specific context. Hard to say for sure.
Got it. Okay, last check. Bonds and commodities. We saw yields on 10-year treasuries dip slightly, gold slipped back a bit after maybe an initial jump, and oil was up.
Right. The small dip in treasury yields suggests maybe there's still some safe haven demand for U.S. government debt, even with dollar worries. Investors might still see treasuries as relatively safe.
Interesting distinction.
Gold is classic safe haven, so an initial pop makes sense. Slipping back could be profit-taking or just other market forces kicking in. Oil going up, that's probably more about oil market fundamental supply. Demand maybe less tied directly to the Fed news itself.
Okay, so let's try and pull this together for everyone listening. We saw some early nerves in Asia, but a more mixed reaction globally in stocks. The big story seems to be this rising anxiety about the Fed's independence thanks to presidential pressure.
Yeah, and that's feeding worries about more market swings, volatility, and maybe even a serious long-term challenge to the dollar's top dog status in the world.
And meanwhile, other central banks, like Japan's, seem to be doing their own thing.
Right. And the really key takeaway here, I think, is how these events are forcing a serious rethink about the bedrock assets of U.S. economic strength, the dollar, treasury bonds, and whether they're still the ultimate safe harbors they used to be.
So here's something to chew on as you digest all this. We know global markets are all tangled together. How might these shifts, these pressures, influence your own financial thinking, maybe your decisions in the next few months? What should you be watching? Inflation reports, Fed statements, trade news, it really makes you consider the bigger, longer-term ripples these events could create on the global stage.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.